So there's been a lot of activity recently in the paint and coatings industry. Part of this can be attributed to increasing focus on emerging markets, which generally have higher growth rates in terms of real GDP, as well as higher growth rates in terms of number of households. Mexico, for example, has growth rates of about 4% per year in terms of real GDP growth, as well as 2% per year in terms of household growth. There's also a very large middle class that's growing very quickly in Mexico, which means that the number of consumers who have the ability to purchase home paint is increasing, making this a more lucrative market for major paint companies.
But with that said, even though the developing markets are higher growth, the U.S. isn't wholly unattractive. It's accelerating at a similar pace in the forecast period due to the slow recovery following the 2009 recession. So with that in mind, though, GDP is going to grow by 2.6% as opposed to the 2.3% that it had in the historic period. And overall number of households will grow by 4% instead of 3% in the historic. On top of that, in last October, the U.S. recorded the highest number of housing starts it's had in 4 years. So with these growth rates in mind, here's a look at what we can expect to see coming from these mergers from Sherwin Williams and PPG in Mexico and the U.S.
In November of 2012, Sherwin Williams announced the acquisition of Consorcio Comex, a large Mexican paint company, for $2.34 billion, which will be the largest acquisition in Sherwin's history. This will give Sherwin a controlling share of the Mexican home paint market, as Consorcio Comex holds 52% of the current market, as well as 3,000 outlets that it operates throughout the country. Sherwin Williams itself has a presence in Mexico, but though it's been present there for over 80 years, has only 6% of the market and is present at only 300 points of sale. It will also improve Sherwin Williams' distribution throughout Central America, where its presence is quite limited currently, but Comex operates 91 stores throughout the region, including in Costa Rica, Panama, and Guatemala. It'll also help to solidify their presence in the United States and Canada by acquiring Comex-owned brands, which have significant regional presences, as well as some share in the industrial market, including in general paint, Color Wheel, Frazee, and Qual.
And they'll certainly need that extra bit of market share in the U.S. because the acquisition of Akzo Nobel by PPG, the North American paint division, will make a very, very competitive decorative paint arena within the U.S. for DIY paints. Sherwin-Williams has long been the number one decorative paint producer in the U.S., but recently it's become quite a bit more competitive. In 2010, Akzo Nobel took over the exclusive paint distribution rights with Walmart, displacing Dutch Boy and putting in Glidden. With Akzo Nobel now being pretty much the number 2 decorative paint producer in the U.S. and PPG being around number 6 for do-it-yourself paint, there's really going to be a lot more competition between Sherwin-Williams and PPG, which will now be gunning for, in 2013, the number 1 paint spot for do-it-yourself paints. And PPG will have a lot to work with the Akzo Nobel acquisition. PPG has its Olympic brand paints, which is normally found in Sears and Lowe's, and Sears is having issues recently in terms of generating sales, but Akzo Nobel has Home Depot and Walmart as main distributors, and those are very big in the U.S. for paints. So it looks like they're going to try and leverage what Akzo Nobel already has in terms of distribution to further grow not just Olympic, but probably Glidden some more as well.